Welcome back to Tesla Daily News Podcast. It's Tuesday, April 21st, 2026. Today we're covering the biggest Tesla stories that can move the stock: Robotaxi expansion and safety scrutiny, full self-driving momentum in Europe, an earnings week market setup, Cybertruck demand signals, and why legacy automakers may be backing away from hands-off autonomy. Let's get into it. Story 1. Tesla says robotaxis are expanding, but availability and safety questions are getting louder. Here's the hook. Tesla's robotaxi push is growing into new cities, but the data shows the rollout is tiny and incidents are piling up. Context: Robotaxi is a major pillar in Tesla's valuation story. Investors price Tesla not only as an automaker, but as a software and autonomy platform. If Robotaxi scales safely, it can unlock higher margin, recurring revenue. If it doesn't, or regulators clamp down, the upside narrative takes a hit. Details: over the weekend, Tesla promoted Robotaxi service in Dallas and Houston. But crowdsourced availability tracking showed service was largely unavailable, with small service areas roughly around 31 square miles in Dallas and about 25 square miles in Houston, and the implication that only 1 or 2 vehicles may have been deployed per city. Meanwhile, reporting out of Austin, where Tesla has been operating about 10 months, indicates a fleet of more than 10 vehicles and an operating area around 245 square miles. The bigger investor concern is safety and transparency. One report notes Tesla disclosed to NHTSA 15 crashes since the Austin service launched, but incident details were redacted. Data cited in that same reporting suggests that in Austin, 14 crashes occurred over roughly 800,000 miles of Robotaxi operation, which works out to about 1 crash every 57,000 miles. And there are videos circulating that allegedly show behavior like stopping in unsafe places, including one clip described as a Robotaxi ending up on a freeway and requiring remote intervention. Impact: for Tesla, this is a double-edged sword. Expansion headlines can lift sentiment into earnings, but limited real-world availability can create stock pump accusations and heighten skepticism. Most importantly, any perception that Tesla is hiding incident detail increases regulatory and legal risk, and that can compress the multiple, especially when autonomy is a core part of the bull case. Takeaway: watch 2 metrics, not the hype: fleet size per city, and any new NHTSA actions or mandated reporting changes. Scaling Robotaxi from a handful of cars to thousands is a very different operational and regulatory challenge. Story 2. Full self-driving is spreading in Europe, and Tesla is doing ride-alongs in Lithuania. Hook: Tesla's European FSD story is moving from coming soon to approved in at least one market and expanding trials elsewhere. Context: Europe has historically been a harder regulatory environment for advanced driver assistance and autonomy. Any progress there matters because it expands Tesla's software attach rate opportunity, and it's also a signal about regulatory credibility. Details: Tesla has said the Netherlands became the first European country to approve full self-driving supervised for public use, with rollout beginning around April 10th. Separately, Tesla is now offering full self-driving supervised ride-alongs at a Tesla center in Vilnius, Lithuania. Tesla also highlights scale numbers. Globally, more than 14 billion kilometers have been driven with FSD supervised. And Tesla claims that when FSD supervised is enabled, the collision likelihood per kilometer can be up to 7 times lower than manual driving, based on its internal methodology. Impact: for investors, FSD growth matters because it's a high-margin software product compared to vehicle gross margin. But note the key word: supervised. This is still a level 2+ system where the driver remains responsible. That limits near-term Robotaxi-style economics, but it can still drive subscription revenue. Takeaway: the near-term bull case is software monetization, not full autonomy. In upcoming earnings commentary, listen for FSD take rate, subscription growth, and regulatory progress beyond the Netherlands. Story 3. Legacy automakers are stepping back from level 3, while Tesla doubles down on level 2+. Hook: BMW and Mercedes are reportedly pulling level 3 eyes-off systems from new flagship models because customers don't want them and they're too expensive. Context: level 3 autonomy shifts legal liability from the driver to the automaker while the system is active. That's incredibly hard and costly to certify, and it's one reason Tesla has stayed with supervised systems that keep the driver responsible. Details: reporting says Mercedes Drive Pilot and BMW Personal Pilot Level 3 systems will not be offered on upcoming refreshed models, with Mercedes saying a next generation may come in a few years. At the same time, Tesla continues pushing FSD supervised and has begun European rollout in at least one country. Impact: strategically, this supports Tesla's approach. ship a broadly usable supervised system at scale, train on massive fleet data, and avoid Level 3 liability for now. But the counterpoint is important. If regulators eventually demand stricter proofs for supervised autonomy, Tesla's camera-only approach and real-world safety record will be under intense scrutiny. Takeaway: competition may be less about who has the flashiest autonomy label and more about who can deploy driver assistance profitably at scale without triggering liability blowups. Story 4. Earnings week is here, and macro volatility is back. Hook. Oil spiked on renewed Middle East tensions, futures softened, and Tesla reports earnings this week. Context: macro moves matter for Tesla because they hit consumer sentiment, financing rates, and risk appetite for high-multiple growth stocks. Details: reports show Brent crude rose roughly 5% to around $95 a barrel at one point, with broader market futures down around 0.5%. Tesla is one of the major names slated to report this week. Impact: higher oil can be a long-run tailwind for EV demand, but in the short run it can raise inflation expectations and keep rates higher, which tends to pressure high-duration stocks like Tesla. Takeaway: into earnings, expect bigger moves than usual. Watch management commentary on demand, pricing, and margin, and any updated guidance tied to autonomy and energy storage. Story 5. Cybertruck demand signals look mixed, and Tesla may be leaning on internal buyers. Hook. New data suggests SpaceX has become a major buyer of Cybertrucks, raising questions about organic consumer demand. Context: Cybertruck was pitched as a breakout product, but investors have been watching whether demand matches early expectations because pickup margins and factory utilization matter for overall profitability. Details: one report citing registration data says that in the fourth quarter of 2025, about 1,279 of 7,071 Cybertrucks sold in the United States were purchased by SpaceX, roughly 18%. It also suggests other Musk-linked entities bought additional units. The same reporting claims consumer demand for Cybertruck fell about 45% in the first quarter of 2026. Impact: if true, internal purchases can help smooth deliveries and keep production lines utilized, but they also risk investor concern about demand quality. Takeaway: in earnings, listen for Cybertruck production, inventory levels, and whether Tesla signals any pricing actions or configuration changes to stimulate demand. Story 6. Lawsuits and hardware expectations around FSD are building. Hook. Tesla faces growing pushback from owners who paid for full self-driving years ago and now claim the promised capability hasn't arrived, especially for older hardware. Context: this is a valuation and trust issue. Autonomy revenue depends on customers believing Tesla will deliver upgrades and functionality over time. Details: reporting describes multiple legal efforts, a class action in California representing roughly 3,000 people, a developing case in Australia, and a European campaign launched in the Netherlands aimed at owners with older hardware. A key theme is hardware versioning, with some owners arguing their vehicles cannot run the newest FSD stack without upgrades. Impact: legal risk here isn't just damages. It can constrain how Tesla markets FSD, which can slow take rates or subscription adoption. Takeaway: investors should monitor language changes in Tesla's marketing and any explicit earnings call commitments on retrofits, HW3 support timelines, and costs. Quick recap before we go. The big Tesla themes today are Robotaxi expansion headlines versus real availability and safety scrutiny, FSD supervised momentum in Europe, legacy automakers retreating from level 3, macro volatility into earnings, and mixed signals on Cybertruck demand. For tomorrow, watch Tesla's earnings release and call closely, especially commentary on margins, FSD monetization, Robotaxi scaling plans, and any regulatory updates. If you got value from today's rundown, subscribe to Tesla Daily News Podcast and follow us for your daily Tesla investor briefing.